Simon, thank you very much indeed. Hello, everyone, and welcome to the Spotlight Initiative discussion on the IIGCC Net Zero Investment Framework. As Simon mentioned, my name is Clare Foster. I'm a project finance partner at law firm Shepherd and Wedderburn, and I also head up our clean energy practice. But for the purposes of today's session, I'm delighted to be your moderator, and my thanks to the Global Ethical Finance Initiative for this opportunity to be with you today. The Net Zero Investment Framework has been developed by the Institutional Investors Group in Climate Change, IIGCC for short, following the launch of the Paris-aligned investment initiative in May 2019. Now, this initiative was created to explore how investors can align their portfolios with the goals of the Paris Agreement. The framework, which was published a short time ago in March 2021, provides a common set of recommended actions, metrics, and methodologies through which investors can maximise their contribution to achieving net zero global emissions by 2050, or hopefully sooner. It's designed to provide a basis upon which a broad range of investors can make commitments to achieving net zero emissions and define strategies, measure alignment, and effectively transition portfolios. Now, in exploring the detail of the Net Zero Investment Framework, I am delighted to be joined by two people who know more about this topic than most. I'm thrilled to welcome firstly Daisy Streatfeild, who is the Director of IIGCC's Investor Practices Programme. Now, as many of you will be aware, the IIGCC is the European membership body for investor collaboration on climate change, with over 300 members consisting mainly of pension funds and asset managers, spread across 22 jurisdictions with over 37 trillion euros in assets under management. Secondly, I'm thrilled to welcome Dewi Dylander, Deputy Executive Director of PKA. Now, Dewi is Head of Sustainable Investments, ESG, and the Investment Secretariat, where she works with integrating ESG in investments, exercising active ownership, and optimising the business through sustainable investments. Welcome, Daisy. Dewi, thank you for joining me today. The framework is a fantastic development for the financial sector in terms of providing a comprehensive guide for asset managers and owners to help them make a significant contribution to achieving net zero. But for the benefit of our audience, let's start at the beginning. Daisy, please can I ask you to share your thoughts in relation to, firstly, the main drivers behind the development of the Net Zero Investment Framework. Why was it needed and how did it develop over time?
Thanks, Claire, and great to be here to share some more insights into the framework and how it was developed. So I think now we talk about net zero very easily and many companies, investors making those commitments. But back a couple of years ago when we launched the Paris-aligned Investment Initiative, it was really a sort of niche subject. And a few of our asset owners, our members, came to us and said, you know, investors are starting to talk about aligning portfolios to Paris and alignment with net zero. And we think, you know, there's a need here for some greater consensus on what that really means for investors and how to translate those goals of the Paris Agreement that was written for countries into something practical that provides direction for investors and how to manage their portfolios and measure their alignment to the goals of the Paris Agreement and that ultimate objective of limiting temperature increase to 1.5 degrees. And that's why we brought together the Paris-aligned Investment Initiative. And you kindly said that IIGCC developed the framework. I have to say it was not IIGCC, it was our members, over 110 of them involved in the process of coming together to define that sort of what it means to be a Paris-aligned investor and to help us identify the best practice methodologies and approaches for both measuring the alignment of a portfolio and assets within the portfolio, and then also to think about how an investor can adopt effective approaches and investment strategies to achieving a more aligned portfolio over time and achieving those sort of targets and metrics in a way that really delivers emissions reductions in the real economy. I think one of the risks that our asset owners who first approached us were wary of is that it might be quite easy for an individual investor to say, well, I've reduced the carbon associated with my portfolio by shifting my investments, but actually it may not have changed anything in the real economy. So there was a real ambition to think about how investors can be part of driving that transition in the real economy to net zero and how they can set those strategies that achieve that. And through that, we worked across 2 years through a number of working groups with our members, first to develop the definitions of what it means to be a Paris-aligned investor. So we think that means having a commitment to achieve net zero portfolio emissions by 2050, but critically adopting an investment strategy now and taking action in a way that achieves that long-term goal over time. And then beyond that, identifying those issues of kind of what metrics and targets you need to set to measure your alignment, both at the portfolio level and also of the assets within your portfolio, and then defining those best practices for how you can manage and transition a portfolio using all the levers that investors have, whether that's engagement and stewardship and what that needs to look like, portfolio construction, use of different kinds of benchmarks, for example. And I think the other thing that became very clear as we were going through this is it wasn't a sort of one or two actions or one or two sort of metrics you're trying to achieve. It really requires a comprehensive approach to maximize that impact that investors can have. And so the net zero investment framework really developed in a way that provides that comprehensive set of recommendations and actions for an investor to fully utilize the levers they have to drive that transition to net zero.
Brilliant. Great to hear about the level of collaboration throughout the industry. And comprehensive was the word that sprang to mind when I read the document. It covers so many different angles, which is terrific. Now, Dewi, I know that PKA has been an active member of the IIGCC for a number of years and has been heavily involved in the framework. Can I ask you to share some opening remarks about your involvement in the initiative from the earliest stages of the framework all the way through to being one of those guinea pig organisations involved in stress testing it?
Yeah, I'd be happy to. Thank you, Claire, and thank you for giving me the opportunity to speak here today. We have, as you mentioned, been an active part of IIGCC and supporting the work. And when the Paris Aligned Investment Initiative developing the net zero framework was launched, we were happy to take an active part. And it's in 3 steps, you can say. I was and I'm still a member of the IIGCC Steering Committee on the Paris Aligned Investment Initiative, where we've discussed now for a couple of years the framework taking shape and the development of the working groups and the various asset classes. My colleague working with sovereign bonds was the co-lead of the working group which on sovereign bonds, which entailed testing measures to construct the aligned portfolio. And finally, as you mentioned yourself, we were the guinea pig. So we were 1 out of 5 companies that participated in the testing phase in order to help us and other investors to apply the framework and to understand its implications a little bit further. So we've been actively involved and are also actively taking part in the future development of the framework. I'll just, if you allow me, just a couple of facts about the PKA being one of the largest pension funds in Denmark. Our asset under management are around 45 billion euros. We are member owned. We've got over 325,000 members, primarily working in the health sector, so nurses, midwives, and so on. And we have for a large number of years believed in green investments, clean energy, and the transformation that lies within that. We set a goal a couple of years ago that was reached last year, that 10% of our asset under management should be invested in green climate-related area. That was reached, and we now set an even more ambitious goal going forward to 2025, that 6.7 billion euros should be invested. So that's a goal that's guiding us in our investments.
Which is terrific, Dewi, and actually a real testament to how robust the framework is, that you're willing to work with it and have actually started to see the results. I appreciate it's early days, but brilliant. Daisy, can I come back to you, please? The framework proposes 2 alignment objectives for a net zero investment strategy. Firstly, to decarbonise investment portfolios in a way that's consistent with achieving global net zero by 2050. And then secondly, to increase investment in the range of climate solutions needed to get to that 2050 goal. So the framework appears to address not only existing investments, but future investment strategy. That 2-pronged approach, I think, is absolutely required. Can you talk us through how these objectives are supported using the components and actions that are set out in the framework?
Yeah, absolutely. And I think it's really important. A lot of the focus when you talk about achieving net zero emissions is on the decarbonisation element. And obviously that's really important. But I think what is often forgotten is the scale of sort of new investment in new technologies that we need to achieve that net zero goal, alongside just reducing the carbon associated with some activities within the portfolio. So we do have these two dimensions that we focus on investors achieving, and PKA is a great example of a fund that is putting emphasis on the increasing investment in the climate solutions, which is really vital, particularly in the short term, to accelerate that transition. And it's very much those two themes that come across all of the components of the framework. And as I mentioned previously, we see it necessary to have a comprehensive approach, and we describe a number of components therefore and provide detailed recommendations in relation to each of those components. And just to give a bit of an overview of those, it starts from really the top down, the direction setting for the portfolio. So that's around governance and strategy. So first of all, setting that net zero commitment, as the likes of PKA have done, to achieve net zero portfolio emissions by 2050, but then translating that into investment beliefs, for example, mandates for your asset managers if you're an asset owner, undertaking all of the climate risk assessment recommendations of the TCFD, and setting the strategy. And we hope the net zero investment framework provides the basis for those strategies. So that component should be made more straightforward through our work. And then the other sort of top down aspect we talk about is objectives and targets. So setting those portfolio level objectives in relation to the emissions reductions you expect to see in relation to your assets at the portfolio level, consistent with achieving those science-based pathways towards net zero emissions, and commensurately scaling up the investment in those climate solutions along the same pathways, guided by what science tells us is needed. And then the third top-down component, and I think this is a really interesting area, is around strategic asset allocation. Most pension funds have some sort of top-down decision-making on allocation of assets within the portfolio and the types of asset classes or variants of asset classes they're looking to invest in. And this can be a really important way of ensuring the portfolio is able to align to Paris and incorporates those metrics around carbon emissions and investment in solutions in those tools that investors use to optimize their portfolio. So not just optimizing anymore for risk and return, but also adding a sort of third dimension to that of climate optimization, which is really important. And thinking about the asset class variants, types of benchmarks, for example, that you want to be allocating your capital to achieve that transition. So those three components are the sort of top down that we talk about, but then the core of it is really at the bottom up level, thinking about what's happening to the assets within your portfolio. Are those companies, the buildings you have, are those operating in a way that is consistent with achieving that transition to net zero and adjusting their business models over time to achieve that? And so we provide a set of recommendations around how you can measure the assets within different asset classes against robust science-based methodologies to be able to measure the alignment of individual assets within the portfolio. And the idea being that you would set goals in relation to the proportion of assets that should increase over time that are themselves aligned to net zero and achieving those emissions reductions. And through that, you get the real economy transition to net zero, not just by selling one asset and buying another, the overall portfolio goal. And then the other really important component is how you manage those assets to achieve greater alignment, to incentivize those assets to shift, for example. And they're really the first best approach, we say, particularly for existing holdings, is engagement and stewardship. Are you engaging with your companies to ensure they are making plans, setting targets, developing their business model in a way that is net zero compatible? And then also thinking about portfolio construction, so overweighting, underweighting, selective divestment, etc. in that regard. And the final set of components I think is also really important is around the kind of market engagement and policy advocacy that we expect investors to do and provide recommendations. We know it's going to be very difficult for individual investors to fully shift their portfolios to that deep decarbonisation of net zero without the market shifting in that direction also, and without the policies in place like carbon pricing, etc., that we need to see. So investors' role in advocating for those data sets, those products that they need to be able to align portfolios and measure their alignment, and also the policies more broadly to create that enabling environment is really important. So that's really a very quick run through of all the components of the framework. There's a lot more detail in terms of clear recommended actions across all of those, and we really encourage viewers to take a look at the framework in more detail if they're interested in any of those parts and a bit more detail on that.
Thank you for that, Daisy. Now, Dewi, I know you've already talked about PKA's commitment to being a responsible green investor. Can you tell us about the drivers behind that commitment from PKA's perspective and how you're putting the framework to practical use to bring your investment portfolio in line with the objectives of the Paris Agreement?
Sure. So we believe, or we find that the framework provides a practical tool for aligning our portfolio towards the Paris Agreement. And we use it already, and we'll use it also in the future to assess our current and potential investments also going forward. So for us, it's important that it's really practical. There's also a working group where we can discuss challenges on how to use, how to assess on the various asset classes, which is really very good. So the framework and the IIGCC's put down 10 principles. We find they provide direction and the foundation for our work in this regard. To be more concrete, we plan to use 2019 as our baseline year for developing goals for reduction also on a short-term basis, 2025, 2030, and so on going forward. Of course, with the main goal being to decarbonize totally in 2050. The purpose is in part to establish how we can live up to the demands of the framework by three things: increasing our knowledge of CO2 reduction, risks and opportunities alongside requirements and modeling of CO2 across the various asset classes. It's 2, to use the acquired knowledge to reduce the carbon footprint of our portfolio, obviously. And 3, to measure the carbon footprint of right now 3 asset classes we're starting out with: real estate, corporate bonds, and listed equity, with the purpose of establishing realistic goals for each of those asset classes, and more to come going forward for the portfolio to 2025, as I mentioned, 2030, and so on. At the same time, we work also with exclusion. We have excluded and set targets for exclusion also for the fossil fuel sector, starting out with the coal companies, looking also at oil and gas companies. And as we've already touched upon, also set targets for increasing our green investments going forward.
Thank you. I mean, what strikes me about the framework is, the words that spring to mind are practical, comprehensive. We know it's been stress tested, and it seems to cover so many of the questions that so many investors are likely to have. I mean, Daisy, at the outset, you were approached by a very small group of asset owners who had an idea of a framework that might help. And having only recently launched the framework back in March this year, keen to understand where you are in terms of uptake and what is the aspiration. Because when you read the foreword to the framework, it talks, the Prince of Wales talks about coalition of the willing. We know this isn't going to be imposed on asset managers and asset investors. It requires an appetite to do so. But what's the reaction been, and what's the uptake like?
Yeah, it's been pretty overwhelming, I think, considering that just 2 years ago we were sort of concerned this might be a bit of a niche venture that only a few asset owners or managers would feel able and ready to do. But one of the key objectives of the Paris Aligned Investment Initiative and developing the framework was to provide the practical basis on which investors felt that they could make these kind of commitments and take these actions. So it was really to provide the tools to investors to enable them to take that leap, to be able to make those commitments around net zero, to feel confident that they could measure the right things, that they could take action in a way that really was had sort of consensus around being best practice. So I think in that regard, we seem to have succeeded in that we see a huge number of investors now using the framework. And I think it was helpful that it was a very inclusive process, and we continue to be very inclusive in the Paris Aligned Investment Initiative itself, in including a wide range of investors, even those who aren't yet ready to take that leap to make a net zero commitment, but want to kind of learn and be part of the process. And so we've had as I say, more than 110 of our members involved in that process. When we launched the framework, Paris Aligned Investment Initiative became a global initiative incorporating other investor network series in North America and the Asian and Australian investor groups, and they are working now with their members. So expanding reach of those, engaging with the framework and being enabled, as Devi says, through some of the working groups we have to support implementation, to use it and implement the recommendations. But we've also seen a huge groundswell in asset owners and managers willing to make net zero commitments. And I think when we launched, even though the framework at that point was still only just finalised, we already had 22 asset owners ready to make the commitment. And I think asset managers with more than 8 trillion in asset under management saying they were going to be using the framework. And in recent months, we've had more asset owners join the commitment, including the largest funds in the US and in Europe, including PKA. And then also we see a huge number of asset managers making commitments under the Net Zero Asset Managers Initiative, and a large proportion of those using the framework as the basis to set their targets and take action. And it's, I think, from where we came just a couple of years ago with a few asset owners saying we might want to work on this to what we see now in terms of the movement within the industry towards net zero. I think it's nearly 40% of assets under management within the net zero asset managers globally. So, really extraordinary progress to setting those targets. But we hope being able to take action in a really robust way on the basis of the framework, not just set the long-term goal, but really make a difference now in terms of managing portfolios in a different way towards net zero.
And that's the point, isn't it? This isn't about 2050, it's about making changes here and now to actually, because if we don't, we're never going to reach the 2050 goal. So now I'm going to ask you a tricky question, which is difficult to answer, but I'm keen to get your perspectives, because I think you may have slightly different perspectives given your respective careers. What do you think are the biggest challenges that face asset managers and asset owners in committing to net zero? Devi, can I come to you first on that? Because obviously you've got an enormous portfolio and, the investments are varied and wide-ranging. The framework's brilliant, but that isn't the silver bullet necessarily. There are challenges there.
Definitely, Claire, there are challenges, and there are various challenges. It can be a challenge to find CO2 neutral or CO2 reductive investments that will provide a stable return. We need a diversified portfolio, so we're looking into various areas. We also believe in the concept of active ownership, so we don't want to exclude all fossil fuel companies. So that's a challenge. And with the rise of new sustainable funds, the question on how to avoid greenwashing is also high on the agenda. Obviously, the new EU legislation, also with the taxonomy coming, will help in that regard. But right now, that's an issue. I would say data and expertise are scarce as well. It can be difficult to evaluate the actual sustainability profile of a given investment going forward. And finally, let me mention that risks connecting to sustainability related investments in emerging markets, so markets outside the EU and the US, are also posing a challenge for us. We try to work around that by having partnership with the government, with other pension funds, and so on. So that helps, but it's difficult to broaden to the whole world.
And Daisy, from your perspective, you've got a unique perspective with IIGCC because you're in contact with just so many organisations. What's your view on this question, having been in touch with so many of them?
Yeah, and I think Devi picks up on the most frequent question we get, which is around data. There is obviously a challenge of data availability. Companies, assets around the world aren't necessarily reporting, and certainly not reporting consistently on their emissions. They're not all kind of able to forecast what their emissions will be in the future. So doing a forward look on your portfolio and whether it will be achieving the emissions reductions that you want is still very challenging. I think that said, in the work that we did on the framework, what we were able to identify was that actually the methodology, the metrics, data sources out there do actually provide quite high coverage. There's a lot of focus on the largest emitters, and that's the right thing. And actually there are quite good resources and methodologies that we recommend in the framework to measure across quite a large coverage of the most material companies in your portfolio. So I think our message is often don't let the perfect be the enemy of the good. There may be parts of your portfolio you have to say we don't have the data yet, but actually you can be taking action, conducting your engagement and stewardship on the basis of pretty good and robust data for certainly the most important companies for the transition in your portfolio. So I think that is going to be a constant challenge, and particularly where the regulation isn't necessarily supporting that data provision. The EU is moving ahead on that with non-financial reporting, etc. But in other regions, it is more of a challenge, certainly. I think the other thing to say is, to an extent, committing to net zero portfolio emissions, particularly if you're a diversified investor, is a bit of a leap of faith. That there probably aren't the scope of assets at the moment that can guarantee you will have a set of investments that are net zero across that kind of level of diversification by 2050. So what investors are really committing to is to be part of that transition, and we sometimes show a kind of slide of how the kind of investor action and setting these targets, goals, taking these actions is actually part of a virtuous circle that then enables government to go further with policy, encourages companies to move, and in so doing provides more investments that are aligned to net zero. So it is part of a process that investors are really committing to as much as the end goal in itself. And we know that, as Dewi mentioned, there aren't necessarily sets of data methodologies for all asset classes, and it's something we're working on under the Paris Line Investment Initiative. We currently have working groups looking at how we expand the approaches we've recommended for new asset classes, private equity and infrastructure, and we're now just about to start work on how you do that for derivatives in the portfolio. So really we're slightly constructing the plane while flying. Unfortunately, we couldn't afford to wait to take off in terms of getting action towards net zero until we had everything in place. But we are working actively and collaboratively to address those sort of gaps where investors will need more information, more data, those recommendations around methodologies to be able to take forward action across the full scope of their portfolios.
I love the positive response to what was a very challenging question. And let's stick with that positive theme. I mean, Dewi, what's next for PKA in terms of its plans to tackle climate change? Because we've talked about the challenges, but the opportunities out there are absolutely enormous.
I agree, they are. If I should mention just one thing, given time constraints, it would be power to X. We're looking very much into power to X because energy storage, it's a global issue. It poses a problem. And with the development of this technology, renewable energy can be stored and transformed into, for instance, green hydrogen, which can then be used as fuel. It's not out there in a big scale, but right now on a trial basis, also in Denmark, where our government, who set a reduction target of 70% CO2 reductions in 2030 compared to 1990, which is quite ambitious, and where we also find that we have to be an active play an active role and be an active partner in that. The government has decided to establish 2 energy islands out in the North Sea by by Bornholm, the island, and also develop both very big offshore windmill farms with up to 10 gigawatt capacity, and at the same time also a power to X plan. We're looking very much into that, both aspects of it, both the power to X, but also obviously given our history, the offshore windmill farms, in order to decide whether or not we should be able to be a partner of this adventure.
Amazing. I mean, when you look even just at the UK targets for offshore wind, decarbonisation of the North Sea, hydrogen and CCUS, and some of the suggestions that are coming out from the Bay's white paper, there's an awful lot that can be done from an investment perspective, and the capex requirements are enormous. So thrilled to hear that you're interested in being part of that journey. Now, you will detect from the accent that it would be remiss of me as a Scot, both working in the financial sector and the clean energy sector, not to mention COP26, which is being held in Glasgow later this year, which we in Scotland are absolutely thrilled about. Can I ask both of you, if you had the opportunity to speak to the decision makers at the COP, what would be your ask? Firstly, to support development of the framework, but secondly, the role of the financial sector in supporting the transition to net zero. Daisy, I'm going to ask you those two questions first and get your view.
Yeah, great question, and really looking forward to the COP in Glasgow. And we've already seen sort of quite big steps being made in terms of countries coming forward with updated NDCs, which is critical. I think the more that countries can get specific on what they're going to do in terms of sector policies, carbon pricing, reducing fossil fuel subsidies, will really be a game changer for the economics of achieving net zero and the ability for investors to invest. So I think as global investors, we call on governments to take these kinds of actions and implement those policies that we need to see. So that would be the first critical thing. I think in terms of the framework and taking forward the actions there, really the emphasis on how investors are increasing their investment in climate solutions and preparing for that. And Dewi gave some good examples where PKA is engaging on that. And I think really investors seeing their role as building that capability to be able to invest at the scale necessary in these new technologies. Apart from anything else, it's a huge opportunity. This is a huge market in which investors should want to invest, but you need to bring together the pieces of the puzzle to make that happen in terms of public policy, incentives, the right people around the table, and that's what we're really trying to achieve. But investors saying that the money is there and building their capability in the way that PKA has done, I think is a really critical piece, and hopefully something that investors will be coming forward with those kind of pledges ahead of the COP.
And Dewi, from your perspective, love to be a fly in the wall in Glasgow in November. If you were there, what would you be asking them to do?
Well, I very much concur with what Daisy has said, and I think if we look at the framework, the more the merrier. That will take it, put it into use, get the practical practice around it. That would be a really good thing. As for the role of the financial sector, well, as I mentioned, we believe that the financial sector and us as investors play a crucial part in the transition to net zero and in reaching the Paris goals. We made a collective pledge as part of the Danish pension sector to invest around 42 billion euros by 2030 in additional green investments in 2019 at the UN Climate Action Summit in New York. So that's in addition to what we're already doing. And if it would be possible to broaden this Danish example, which was backed by a number of very big pension funds around the world, but if that would get some global momentum, both in Europe but also globally, that would be marvelous to showcase in Glasgow, where I look forward to participate, hopefully in person this year.
You'd be very welcome, both of you. I'm afraid we're out of time and we have to leave the discussion there. My thanks to your audience for your attention, and very special thanks to Daisy and Dewi for taking the time to talk about the Net Zero Investment Framework, which in my view is a fantastic tool for investors. For those who've not had the opportunity to read about the framework or want to wish to find out more, then I'd encourage you to go to the IIGCC website for further details. For now, my thanks to all of you again, and I hope you enjoy the rest of the summit. Thank you and goodbye.